Hi, and welcome to another episode of Bitdgragon Live. My name's Adam Russell. I'm your host. This is episode 33. We're going to talk about a lot of people come to you and they say, hey, I've got Bitcoin for sale. I have large amounts of Bitcoin for sale. 100,000, 200,000 Bitcoin, 500,000, $500 million, freaking a billion, 500 billion, $1 trillion in Bitcoin. I mean, it's ridiculous what you hear in the market. And the one thing that I found is that you can have a buyer, you can have a seller, but can you really actually get a transaction done? And so today we're going to talk about my past a little bit and how a lot of this is just pie in the sky, guys. Unfortunately, most of these transactions are never going to happen. Somebody who comes to you and says, I have a huge amount of Bitcoin for sale, you've got to be really wary. Why? Because there's a lot of places that people can unload Bitcoin, but the one thing that they're trying to do is they're trying to get it offline. They don't want to get it on exchange because they feel that it will manipulate the market. And more importantly, they're not going to get a good price for it. They're not going to get a discount on it. So when people move large amounts of Bitcoin, they're expecting a discount. Now, it's unrealistic to think you're going to get 8 or 10% off. At the end of the day, there's what they call spot, which is the current price of Bitcoin. You got to understand that when you go to get a discount, people are brokers. So there's all these brokers in the middle, right? There's usually, you've got to have somebody who is direct to the source. If they're not direct to the source, the chances are you're probably not going to get a transaction done. Now, you may have somebody direct on one side, but they're not direct on the other side. And that causes a problem because one of three things are going to happen. Number one, you're not going to have procedures that people can work with. So the discounts aren't going to be right. The way that they're going to show, I'm going to show you what I have before you show me what you have. So I'm going to show you proof of wallet, or you're going to show me proof of funds. And so I'm going to lift my skirt before you lift your skirt is one of the biggest problems when it comes to this. Second thing that happens is that you get greedy brokers. You get all these brokers that all want to make a ton of money. And at the end of the day, a very, very small fraction of a percent on $1 billion transaction is a huge amount of money. But they want to get, a 0.5% or 1/4% or a whole percent, and they're smoking crack, to be honest. It's not going to happen. If you're ever going to get one of these done, and maybe 1 out of 100 actually gets done, there's certain things that have to be in place. And number one, and most important, is you have to have a relationship directly with the buyer and directly with the seller. You guys can't have these broker chains. You can't have, this person who knows somebody that's in Hong Kong that has access to all of this Bitcoin or has access to all this money. Chances are, if you, number one, not in the same country, that causes an issue right off the bat because a lot of times you can't regulate. There's no real legal parameters to this type of transaction. Now, the good news is if you are able to get one set up, you're going to put it on an escrow where you're going to be able to put your wallet up. They put their wallet on one side, and when the money is actually released, then the actual funds go to all parties, so the brokers in the middle, the intermediaries get paid. There's another name for the person that is direct to that person. They'll call them a mandate, or they'll call them a buyer or a seller's representative. But at the end of the day, it's just somebody who has a relationship, and they don't necessarily have signatory authority, because in this case, it's a blockchain, so it's really not anything to do with signatures. There's really no paper involved. It's all digital. When something's digital, that's the whole key to Bitcoin. That's the whole key to blockchain. It's decentralized, and there's a trustless system. But that being said, when you deal with these type of transactions, you have to look at also the percentages, the discounts. So when you're dealing with Bitcoin, at spot is the actual price that it is at the time of the transaction. And then maybe you might be lucky if you get 2 or 3 discount points off of there. And then usually there's maybe 1 or 2 points, either 1 point to the buy side, 1 point to the sell side, and the sell side's typically closed. Normally all of the discounts and all of the money is usually on the buy side. It's just the way these transactions typically work. And everybody seems to want to be ends up on the buy side when it comes to making money. One of the most important parts is that you have to actually vet this project. You have to vet the people, see that they have a proof of funds. Can they prove that they actually have the money? And not the brokers, but the people who actually have the relationships. And the person who has the coin. Do they really have coin? Do they really actually have 100,000 Bitcoin? I want you guys to think about that for a second. 100,000 Bitcoin at $8,000 a coin. That's $800 million. Do they actually have $800 million? Some do, some don't. Most don't. When Bitcoin hits 10,000, that would be $1 billion in Bitcoin. So understand that even a small fraction of that from a broker fee is a lot of money. Now, you're also going to see smaller transactions. You're going to see people that are trying to move 5,000, 10,000, 50,000, 100,000, but in increments, and they do them in tranches, they call it. And a tranche means you're not going to move maybe 100,000 Bitcoin in one block. You might move, say, 5,000 a week for a period of time, or 10,000 a week for, say, 10 weeks. That's more likely what's going to happen than to move a huge block. But every once in a while, somebody may actually have a block of Bitcoin that they have to sell. At the end of the day, guys, for my company, Global Resource Broker, that owns Bitdgragon, literally for years we dealt with bank instruments and commodities, and we understand what it's like to have procedures in place, and obviously making sure that the prices are in line and the logistics make sense and that everybody on the same page and the brokers don't get in the way. I will tell you, brokers kill more deals than any other possible thing that could happen wrong with the transaction is greed. Greed with brokers on either the buy side or the sell side. Look, just be thankful. If you're a part of a transaction and you're actually going to make one happen, just be thankful if you actually get paid from that transaction at all, anything at all. Because let's face it, if they didn't want to pay you, they could just have lawyers tied up on a typical transaction when you have paper to signature. The good news about the blockchain is that if it's all escrowed and they already have your wallet address, when they pull the trigger, everyone gets paid. Why? Because it's electronic and it's trustless. So a lawyer can't go running away from your money with your money because there's no lawyer involved. The banker can't screw up the transaction and hold up the money because there's no banker involved. Everything is handled through the digital assets. So that's what makes these transactions extremely attractive to most people. Everybody wants to close these transactions. This is life-changing money. Typically, people that close these type of transactions make millions of dollars. You know, even hundreds of thousands of dollars can be life-changing for a lot of people. But guys, I understand something. This is a unicorn. These don't normally happen. Don't get your hopes up. You know, like I said, 1 out of 100 are going to close. If you happen to have that relationship with the buyer and the seller, God bless you, you're hooked up. But I highly doubt that. So make sure that if you're going to enter into one of these transactions or you're going to waste your time, and I will tell you that the majority of these are going to waste your time, you're better off learning how to trade. You're better off learning more about crypto and getting involved in crypto like we do on our channel here. And for the long-term hodl on it, you're probably going to even get better returns than having to spend all your time trying to close one of these transactions. Guys, this week alone, I think I talked to 10 people that are closing huge Bitcoin transactions. And you're going to run into them too if you're in this space. Just know that most of them are full of bullshit. It's total BS. A lot of people don't have what they say they have, and they're not going to be able to prove it either. So say somebody says I have 100,000 Bitcoin, they need to show it. Most people are not going to show it. Why? Because people will take that money. They'll take the Bitcoin wallet address, and they will go shop it. They might not even have the money, but they'll say, hey, you know what? I have somebody that wants to buy that Bitcoin, and they don't have anybody, but they'll go run around to everybody they know and try to find somebody. And the next thing you know, you get a broker backed by a broker backed by a broker backed by a broker. You get this huge broker chain, and it's typically a break in the chain is a trust break, and that's what happens why these transactions crash. And then people run around with this information that's proprietary. You shouldn't be running around with other people's, their wallet addresses, and you shouldn't be running around with people's proof of funds. Whether if it's bank to bank, it's one thing because it's verified at a bank level. But if somebody shows a bank statement or what they call a tear sheet, you don't go running around with somebody's tear sheet. Look, I got somebody who has, $500,000, $500 million, and they want to buy, 50,000 Bitcoin. You don't do that. Why? Because you lose total credibility. It's just the wrong thing to do. So I want to just put out a quick video today in regards to this topic. I keep coming across it. I'm going to come across it more. So I'd like to just say, hey, you know what? I did a video on that. And that's going to be our new token phrase for Bitdragon Live. Hey, I did a video on that. We're doing videos on ICOs. We're doing videos on trading. We're doing videos on crypto. We're super excited about the future, where things are going. By the way, guys, Consensus just happened in New York City. I don't know when you're watching this video, but there was a tremendous amount of information that came out of Consensus. And one of the main things that this event, which is hosted by CoinDesk, that it brought to the surface was institutional investors are absolutely chomping at the bit to get involved from a custody perspective, from a way to handle the tools to bring in large amounts. We're talking large amounts of money into the network to be able to get Bitcoin up to $1 trillion, to get their market into multi-trillions of dollars. You know, the security coins are coming. Obviously, there's still going to be utility tokens. And even the SEC just put up the Howey test. They call it the Howeycoin. They've made an actual mock-up SEC site called Howeycoins. If you go to howeycoins.com, as you guys can see, howeycoins.com was created as a mock-up website to show what not to do if you're an ICO and you're trying to not be considered a security token. They have to pass the Howey test. That simply means that they are not a percentage ownership in a company. They're not guaranteed results or returns like a dividend, because then they're going to be considered a security. Any kind of speculative value of when you're selling it and they're marketing it and they have any kind of return from them marketing it, again, it won't pass the Howey test. If it's a utility token, that's different. If it's strictly based on utility and has a utility aspect to it, then it's not considered a security token. But if it's considered a security token, it's going to be regulated by the SEC. If celebrities are endorsing it, if there's any kind of guarantees, if there's any kind of returns, there's lots of reasons. And so they created this Howeycoins website as a kind of a spoof as what not to do if you're going to create your ICO. So I just want to share that with you guys. We truly appreciate you guys. I know that we've been so tied up learning about trading and trading ourselves and doing a lot of stuff on Instagram and really getting involved in the fabric of this industry, because at the end of the day, you know, when you look at the industries that are affected by blockchain, it's unbelievable. Everything from augmented reality and virtual reality and advertising and I mean, you name it, you know, decentralizing the web and decentralizing video and banking and merchant accounts. And I mean, it just goes on and on and on. And one thing I can tell you is that it's exciting to be in early. And we are in the very beginning. And when you look at some of the markets that were huge, like the commodities markets at the very beginnings, this is like before that. Like literally, they don't even have derivatives and they don't even have a lot of the instruments in place that all the big institutional investors really want to have in place. None of that is in place yet. Why? Because crypto at the moment is still too volatile. That's why Goldman Sachs bought Circle. I used to invest in Circle as a wallet. And I used to put my money, not invest, but I used to use it as a wallet to be able to put my money in. So I put my money in the Circle wallet, and then I could get out from USD. I could use my debit card, credit card, and I could get tokens back. And I would buy Bitcoin, I'd buy Ethereum, and so on. Well, they have decided to create their own Circle under the Goldman Sachs name, USDC, which is going to be like Tether, which is USDT as in Tom. And so they realized that they need something that they can manipulate the market even more. And so they created USDT. USDT is basically a crypto coin that they have created that is backed by an investment by Bitmain, which is the largest provider of mining equipment in the world. And they're basically going to have it pegged to the dollar. They're also going to peg it to other currencies around the world, but it's going to start out with the fiat currency, which is the dollar. And so for every dollar, there'll be one USDC, as in Charlie. So it stands for USD Circle Coin or USD coin. So at the end of the day, guys, there's going to be market manipulation. So you might as well learn to trade because they're going to go up. It's going to go down. Just take advantage of the dips. Take advantage of the ups. Take advantage of the downs. Take advantage of the movement of the market. Make money with the waves like the ocean. So with that, guys, we appreciate you guys, spending the time on the channel. You could have done anything else. Please, smash up those likes. Obviously, make sure and share the videos with other people. We're going to try to get videos out more often. We haven't been out here for a week or so, and we just truly appreciate everyone that follows Bitdgragon Live on our Instagram channel. We try to put up our news on there. And of course, on here, we try to put up content that is relevant, that you can work with, that'll help you long term. So I truly appreciate everyone. Take care, take charge, and we'll see you at the top.